Good morning from our global headquarters in New York. I'm Manus Cranny. You're welcome to Bloomberg Brief. Let's set that agenda. Yields drop on more dovish Fed speak, wrapping up a busy week of economic data and bank earnings. Right on track. Treasury Secretary nominee Scott Bessent clears a Senate grilling just days ahead of the presidential inauguration. And a crucial weekend for TikTok. The U.S. Supreme Court is set to rule on the app's shutdown as the incoming president pledges an extension. Good morning. Wow, what a week for bonds. Down 16 basis points. We had that beautiful number from CPI, which relieved the bond market. Top it off with a dovish Waller, shifting to possibility of a March cut if the data rolls in, as we saw from the CPI. Bonds are flat at the moment. 460 is where we trade. Don't rule out the possibility of more rate cuts. That was the narrative. By the way, Nomura joins T. Rowe Price saying you could see 6% on these bond yields. It's not over yet. Stock market takes relief from the relief in the yield. We've got a number of notes out this morning. Of course, Bank of America, Michael Hartner comes out with, you'll have a stable performance in U.S. equities. We're up just under 0.5% on the NASDAQ. U.S. stocks are protected by Trump from the downside. Risks such as high concentration are there. So the Trump put is incredibly important for Bank of America in the near term. Other stocks we're keeping an eye on. This is what we got for you. Rio Tinto rising as Bloomberg reports it has held early talks with Glencore, although it pulled back after Rio says the talks are not active. MicroStrategy and other crypto stocks rising as President-elect Donald Trump plans to release an executive order making crypto a national priority. Applied Materials has been upgraded to overweight from sector weight as KeyBank as the broker repositions semi-cap coverage toward immediate growth drivers. In just a few moments, Tim Graf will start the conversation with me from State Street. Later in the hour, we have Kathy Jones from Charles Schwab. A feast for you. First up, Treasury Secretary nominee Scott Bessent paves the way for confirmation.
The United States is not going to default on its debt if I'm confirmed. The FOMC should be independent. I will be 100% on board for taking sanctions up, especially on the Russian oil majors. Americans are barreling towards an economic crisis at year end. If we do not renew and extend, then we will be facing an economic calamity. On CBDCs, I see no reason for the U.S. to have a central bank digital currency. I firmly believe that if confirmed and with your counsel and support, we can usher in a new, more balanced era of prosperity.
Not just prosperity, but a generational opportunity and a golden age. My guest is Tim Graf, head of EMEA for macro strategy over at State Street. Tim, look, the calamity of no tax deal were front and center from Bessent yesterday. You say that for 2025, you've got to make some heroic assumptions. What's the most heroic assumption that you heard from Scott Bessent?
From Bessent himself, it was one that actually wasn't in the clip just there, which is talking about tariffs not being inflationary in any sense. And that may well be true. Actually, the first round of Trump tariffs in his first term were not that inflationary when they came about. They were absorbed primarily by retailer margins and to a certain degree by movements in currencies. That may be the case this time around, but if we're talking about some of the extreme tariffs that have been mooted during the campaign season by Trump and his team, I think that's a fairly heroic assumption to think that they wouldn't feed at some point through into higher prices and higher inflation.
Did that just chip away at the credibility? Because he's promising, you know, the power of 3, and 3% deficit is one of those, and that's the holy grail for the bond market, isn't it?
It is. I think that's a heroic assumption for the very short term. Over the long term, I think it's a very attainable goal and a very worthwhile goal. In the very short run, I suspect it won't be met so quickly, just given the size of entitlements. You probably need the economy to grow and grow your way out towards smaller deficits. But yeah, I think whether it damages his credibility, I'm not certain. This is a hearing. He's going to say all the right things and, you know, get across the points that the administration wants to get across. But I think we do have to take with a grain of salt some of the more heroic assumptions that we're talking about and some of the more flowery language on, you know, extending the tax cut, not extending the tax cuts being a potential calamity. I mean, that's probably overstating the case a little bit, even if the goal is probably worthwhile.
Okay, I mean, you're right. A lot of this was political theatre, getting the statements out there, the agenda out there. When you look at the performance in the bond market this week, Tim, down 16 basis points, the CPI was the saving grace in the middle of the week. But again, going into this administration term, premium is up. There are concerns about inflation. As you say, he decried the tariffs would not deliver inflation. Where are you in this danger zone, 4.5% to 5%? Are you more of the view that tariffs have the propensity to deliver inflation and we're not done with the rout yet?
I think that's right. I think the next 6 months are going to be, I think, quite volatile when it comes to expectations around policy and therefore what that might do to inflation. And that's both a trade policy dynamic that contributes to that, as well as the fiscal dynamics that we've already discussed. And I probably do take kind of the high end of that range. I don't think we go much further beyond 5.25% on 10-year yields. But I do think we have the potential to test that, just given the policy framework that is being put out by the Trump administration, whether it's trade, fiscal policy, immigration policy, we haven't really talked about. That has an inflationary tilt to it. I suspect the risk reward is favoring the upper end of that range, even if I don't think you go too far beyond, say, 5.25%. I think the near-term dynamics argue that you probably need to push towards higher yields.
How much of a jolt then? I mean, T. Rowe Price and Nomura are up at 6%. You're at 5.25%. You're the bid, they're the offer. At 5.25%, what does that do? Just make a market. I can charge brokerage in the middle. Would 5.25% give me a cyclical correction? You say it's overdue.
I think it certainly tightens conditions, and the most hawkish Fed member, when you look at their projections, would still tell you that policy, based on their own projections in the dots, would tell you policy is restrictive. And if you take long-end rates higher, that further restricts the economy a little bit. And so I think it does lead to potentially a stronger downturn or a slowing of the U.S. economy. I'm not forecasting a recession by any means. So yes, I think it does tighten conditions. I wouldn't see those forecasts for even higher than that as likely, just given long-term yields typically wind up being around where nominal GDP is, and I don't see 6% nominal GDP. I see it as closer to maybe 4.5% to 5% long run. So that's why I kind of top yields out where I do.
Now, your contrarian view for 2025 is, it's sort of very you. I'm not a very big fan, probably not being a fan of equities. I mean, can you stand that up for me? Because I've got Michael Hartman here saying that I've got the Trump put, which is active and loud. It's going to be U.S. stocks are protected by Trump from the downside. So why are you not a fan?
I just think it's a year where you're following two very strong years for equities, the last year of which was, I think, really helped along by the prospect of easing from the Fed and an easing bias, most notably, from the Fed. And you had the promise of stimulus from China in the second half of the year that contributed to an improving global growth dynamic. And that's going to feed into a positive story for risky asset valuations. Well, both of those factors are kind of done. We've seen a lot of stimulus from China, and it's not exactly been the most scintillating when it comes to the domestic growth story. And you've seen the Fed now, I think, adopt much more of an on-hold posture. So for the new year, what you need are, I think, heroic assumptions to be met, and that is continued growth in revenue, which is certainly possible. These are great companies we're talking about in terms of the U.S. tech sector that's driving valuation. But I think you're also assuming that margins improve further from here. And when you then go back to all of these policy risks we've just talked about on trade, on fiscal policy, et cetera, I do wonder if that's the heroic assumption here, that margins will continue to improve because you have a lot of factors, whether it's on rates or whether it's on tariffs, that have the potential to damage margins. So that's where I'm not necessarily doom and gloom or bearish. It just feels as though there's a lot of good news here already in the price.
Okay, well, don't worry. We've got 12 months to reassess, and one can always pivot. It's the art of how you do it. Tim, thank you very much. Tim Graf there at State Street. Other stories trending on your Bloomberg terminal this morning. This is what we got. Treasury Secretary nominee Scott Bessent is on track to be confirmed following his hearing. It's unclear when the Republican-controlled Senate will vote on his nomination. However, Democrats stated specific objections to him taking the position. If confirmed, Bessent will be the first openly gay Treasury Secretary. President Xi Jinping will not attend President-elect Trump's inauguration, but is sending the vice president instead. The announcement confirming the appearance said China wants stable, healthy and sustainable relationship with the U.S. This comes as the relationship between the two countries has deteriorated in recent years. Bloomberg sources say President-elect Donald Trump is planning to release an executive order elevating crypto as a policy priority and giving the industry insiders a voice within his administration. The order may direct government agencies to review policies as digital assets and pause litigation. Just a quick check on the price of Bitcoin, as you can see there. I mean, the lines potentially from this executive order are creation of a national Bitcoin stockpile and a permanent national asset to benefit all Americans. Up she goes, up 1.84%. Coming up on the show, we are going to talk more about geopolitics. We are back to Israel as the potential for the ceasefire to evolve is underway. Breaking news across the Bloomberg terminal from Israel now. The Security Cabinet are meeting, and these are the first lines that they're delivering. The hostage release is expected on Sunday, pending approvals. These are the first lines to come across the Bloomberg terminal. Let's get to Tel Aviv. Our colleague Oliver Crook is on the ground. Oliver, this is the Security Cabinet, then we have the full Cabinet. The expectations in terms of passage of this agreed deal in the Security Cabinet is where it's perhaps going to be more contentious relative to the Cabinet.
Yeah, that's right, Menace. So listen, even within the first 24 hours of this deal being announced on Wednesday night by the Qataris, by Donald Trump, by Joe Biden, there were some stumbling blocks. Benjamin Netanyahu originally resistant to actually agree, saying that Hamas had reneged on parts of the deal. Those parts of the sort of debate had been cleared up by this morning, which meant that Benjamin Netanyahu then was willing to bring this to a vote to the Security Cabinet. That is where things sit right now, and they sit within the Security Cabinet, and that is where you might find the next stumbling block. And this is an internal, domestic, political story within Israel, where you have this government, this coalition that has been propped up, not just by the Likud party, that's Benjamin Netanyahu's party, but two sort of right-wing parties, and who basically have not wanted to stop the war until Hamas is entirely basically wiped out. The question is if they would be willing to leave this coalition government. There have been threats to walk away if they agree to this ceasefire. But even in the event of that, Manus, this is a government that can continue to operate as a minority, and there is such intense pressure here in Israel, Manus. It's the first thing you see when you get off the plane in the airport, the posters of the hostages, to get this deal through, to get these hostages home, that is very likely to pass. And that would mean that on Sunday, you would get the beginning of the first really durable ceasefire in this conflict in the last year and 3 months that could last 6 weeks.
There are other facets to the initial part of this ceasefire. One is aid and the withdrawal of troops. A quick update there.
Yeah, so listen, Manus, what we will get, the mechanics of what we actually get is on Sunday, you'll get the first hostages to be released. We understand there will be 3 women released on Sunday. Then that will also begin the release of prisoners from the Israeli sides onto the Palestinians. As you say, Manus, there's going to be sort of the release of huge volumes of aid. As we know, 45,000 people have been killed in Gaza. What there is also needed there is huge infrastructure destruction, and so you need to get those goods in. And as you say, Manus, critically here, this would mean that the fighting would stop for at least 6 weeks, and this would mean the withdrawal of Israeli troops from the center, the most populated parts of Gaza, to the eastern corridor, and that would potentially pave the way, as the brokers of this deal would like to see, to a durable peace. Whether or not that happens, Manus, is an entirely different question.
And there will be a trifecta of nations based in Egypt that will monitor this situation: the United States, Qatar, along with Egypt. So the roadway to a permanent ceasefire, this is critically important, policing this interim phase, isn't it?
Yeah, that's right. Absolutely. So whether or not the conditions of the ceasefire will be sort of held by either side, this, as you say, will be monitored by the United States, by the Qataris, by the Egyptians. And really the way that they presented this, the Qataris, but also Joe Biden, is that this is the first phase of 3 phases to this ceasefire. What they would like to see is not just a ceasefire for 6 weeks, Manus. They really would like to cast this as the beginning of the end of this war. But we know how difficult it has been to get to even this very first step, this very first part of the ceasefire. And frankly, the second phase phase and the third phase are not going to be any easier to arrive at, because it begins to bring up the thorniest questions at the very heart of the debate between Palestine and Israel, which is basically who is going to preserve the security guarantees in Gaza if the Israeli forces were to withdraw. How are you going to get a government in place that is both credible with the local people and credible with the Israelis? These are some of the most difficult questions to answer, Manus. And frankly, in order to get there, first of all, we need to get to this first phase of the ceasefire, but everybody's holding their breath, and that can get over the line. And you can at least get some prisoners and some hostages released and stop the fighting for at least 6 weeks.
Oliver, thank you very much. As we get more breaking news from that security cabinet and the cabinet, we'll bring it to you. Oliver Crook in Tel Aviv. To the commodity market, there's a number of factors at play. The oil market up by 1/8 of 1%, and New York crude up 1/3 of 1%. We're going for the fourth week of gains. Scott Bessent in front of the committee yesterday talking about sanctions and the propensity to raise sanctions. I will be 100% on board for taking sanctions up. This is on Russia. This is about delivering the potential deal with Ukraine. So that is a shift in the gears. We're expecting quite a heightened set of sanctions on Iran, Venezuela, and Russia. Gold comes back by 1/4 of 1%. Coming up in the show, China hits the growth target, but the tariffs are looming from the United States of America. We'll discuss. Context matters on Bloomberg. Bloomberg Brief. I'm Manus Cranny in New York. Your front pages from around the world. Let's give you a bit of a flavour. First up, Wall Street Journal reads with President-elect Trump's allies eyeing a last-ditch effort to save, you got it, TikTok. Trump's advisors are reviewing the law to find ways to push back the deadline by 60 to 90 days. Now, the ban is set for Sunday, but an outage could be brief if Trump proceeds with an executive order. Next up, Washington Post on SpaceX's Starship rocket exploding minutes just into its 7th test flight. The rocket was meant to attempt to reach near orbital speeds, but it lost communication 8.5 minutes into the mission. Elon Musk attributed the failure to possible oxygen fuel leak and said that the next launch is on track for next month. And Bloomberg, we lead with the China GDP story. Growth coming in at 5% for the whole of 2024. That beat the estimates of 4.9%. The NBS State of the Economy was overall stable and progressed with stability in 2024. Let's break down the numbers and get a little bit of insight. Noor Al-Ali joins me. Noor, you look at these numbers, I mean, it's described as recovering remarkably in the fourth quarter, 5.4%. How much of that is to do with the stimulus that we saw early in the Q4?
Yeah, absolutely, Manus. It's a bulk of it, right? It's that stimulus push at the end of the year that really boosted that fourth quarter GDP to 5.4%, which led to that 5% target being met. Again, we know that Chinese officials have reaffirmed that target again for 2025. And if you look at money growth trends, you're seeing that pull higher. And those typically lead the economy growth by about 3 months or so. So I am expecting some form of growth still. But of course, there are a lot of challenges ahead, and we can discuss those in a sec.
Yeah, I mean, let's just talk about that. The risk is at a max level, 60% tariffs. That's what's been touted here in the United States. We won't know until perhaps next week. At 60% tariff to China, what would that do to the economy, to the disinflation? I mean, that would be pretty savage.
Yeah, absolutely, Manus. Look, we still don't know what kind of tariff or trade deal or trade situation is going to happen after Trump takes office. And look, his inauguration is Monday. We do have some Chinese officials also making their way there as well. That is obviously something that is on investors' mind today because you've got, you know, the disinflation story or the deflationary story, apologies, in China is still pretty strong. That, you know, consumption figure that we had, although it was pretty good in the fourth quarter and in December, those numbers were primarily due to those stimulus efforts. And a lot of analysts and investors are looking at those stimulus efforts and they're thinking they've fallen a little too short. You know, we're not expecting to see that blowout earnings season as a result of these stimulus efforts. You also have, you know, a lot of concerns about the economy just as you go into these very complicated trade situations that, put China at risk and the rest of the world as well.
So Xi Jinping's not going to the inauguration. I don't think anybody's shocked by that headline, but obviously what cauterizes it, the Vice President, Han Zheng, is going. So this is about the art of the deal, take two, really, from the Chinese side. How much more progressed are they in dealing with this potential Trump administration the second time around?
Well, look, I mean, as you say, it's the second time around, right? So Chinese officials definitely, at least from a market's perspective, have a lot more experience dealing with Trump and understanding the trade situation after his first term. But if you balance that against the economic risks and the economic situation that they're going through at the moment, it pretty much balances it out. And what comes ahead is a lot of uncertainty. Chinese stocks did have their best week in about three months now. But I think the question here is, to what extent does that rally go, and when does the momentum really fade?
Okay, we're going to keep an eye on the currency. Yuan trading at 734. Big issue around the currency. Noor Al-Ali there. Coming up, Kathy Jones of Charles Schwab. From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Manish Granny. Let's set your agenda. Yields drop as Waller reignites early and multiple rate cuts, wrapping up a busy week of economic data and bank earnings. Right on track, Treasury Secretary nominee Scott Bessent clears a Senate grilling just days ahead of the presidential inauguration. And a crucial weekend for TikTok. The U.S. Supreme Court is set to rule on the app's shutdown as the incoming President Trump pledges an extension. Good morning. Ground zero for risk. The bond market. What a week. Down 16 basis points in total. We just had Tim Graf from State Street saying he would not be surprised if we get to 5.25%. You've got, by the way, T. Rowe Price joining Nomura, that you could explode to 6%. But right now, the bond market is taking its lead from the CPI numbers and from Mr. Waller yesterday saying, look, if the data rolls on as we've had, you could have rate cuts again as early as March and multiple rate cuts this year. It would take a lot to get there. But the equity market liked it. It's struggling just at the moment. We're up 0.4%. We're trying to wrap up the week to the upside. Bank of America, Michael Hartnett has come out and said, look, you're going to have a stable performance in the equity market. You've got the protection of Trump, and that protects the downside. The Trump put, in his view, lives large across these equities. JP Morgan say for the bulls out there who hadn't had an opportunity, that quieter CPI is your opportunity to reappraise risk. And let's talk about the reappraisal of risk. Term premium, the extra premium you want as a bondholder to hold U.S. Treasuries, has exploded by nearly 85 basis points from the nadir in September. And this is what Kathy Jones, Chief Fixed Income Strategist over at Charles Schwab, is focused on. Kathy, a lot of the momentum in this term premium is, some would say, to do with the Fed, cut. It was a mistake. We've got fiscal angst and we've got tariff angst. How much of that angst is represented in that term premium right now? Is it fully charged for the risks?
Well, I think the term premium really reflects the fact that the path of Fed rate cuts, or the expected path, has changed quite a bit. And that's changed because of concerns about inflation, concerns about policy going forward. So it's all wrapped up in the term premium, which is why I like to watch it, because it kind of summarizes everything. But yeah, I think there's the stronger economy than we had thought just a few months ago. Inflation, albeit the CPI number was good, relative to expectations, you're still looking at inflation staying stubbornly above the Fed's target. It's going to take some time to come down. And then you've got all the policy uncertainty coming up as to what tariffs and immigration policy and potential tax cuts will do on the inflation side longer term. So the term premium kind of encompasses all that uncertainty. How much room does the Fed have to cut if all those things are going on in the background?
Were you surprised by Waller's comments yesterday? We know he's on the dovish side, but talking about as early as March and maybe multiple cuts. Of course, he was saying he's data dependent. He didn't mention policy. Well, not in that syncopation.
Yeah, I was a little surprised at how dovish he came off. Obviously, he represents a certain segment of the Fed that says, yeah, we still see inflation coming down. We still see room for further rate cuts. And as early as the first half of this year, he did caveat it a fair amount, saying if,
Yeah.
then
But that was
possible.
data, not policy, Kathy. And I think we're moving into a policy, not data.
I would agree with you. I don't think the Fed is comfortable talking about policy until there's actual policy to talk about. So I think they'll hold off on mentioning that. But clearly they're doing some scenario analysis and trying to get their arms around what the implications are of policy. We just don't have anything really, fundamentally strong to go on yet. We have no specifics yet. In fact, the tariff talk is all over the place. We don't even have that yet. And that's supposed to be implemented right away.
Well, let's just dig into tariffs a little bit. Canada are readying $100 billion worth of boomerang tariffs. So immediately you get some quantification of the scale of the risk of boomerang tariffs. And that's a risk to inflation and growth, isn't it?
Yeah, it's particularly risky on the goods side because much of what we import is goods rather than services. So we know from previous experience that what happens is those goods prices go up because of the tariff, that most of that gets passed along to consumers. And then you have the retaliatory tariffs, and then you have the slowdown in the economy that goes with that because none of this is pro-growth. So, the more that it happens, the higher the tariffs, the more the retaliation, the more you have the risk of slowing down economic growth down the road. But in the initial phases, it does tend to raise price level, at least modestly or moderately on a one-time basis.
Look, this week has been a reprieve for the bond market, down 15 basis points. We've come off that. You know the fear that we had on Monday and Tuesday? We've repriced that. But I want to get a sense from you. Tim says 5.25 is eminently possible. Nomura say this. We posit that the 10-year U.S. Treasury yield, still low in relation to the twos, is the key driver. Consumer price inflation and fiscal balance. So it's about where you start. It's about where you start this new term of Trump presidency too. That's quite a aggressive call at 6%. What has to happen to break 5 and into that higher level? Is that a possibility? Are you thinking that that is a real possibility?
Well, we think 5 is certainly a reasonable probability, given where we're going right now. I think 6 is you have to get really a lot of inflation going and a big shift in Fed policy. So in simple terms, if you say, if we think that Fed policy gets down to 4%, the Fed funds rate gets down to 3.75 to 4%, roughly add 100 basis points, 125 basis points to that, you have kind of historically a level where the 10-year yield has traded. So that's 5 to 5.25%. To get to 6, you have to believe that we have enough inflation growth to propel the Fed to tighten policy in a reasonably short period of time. I don't think that that's very likely, given that although inflation might be sticky, it's not really going up at a rate that's concerning. And we do have a little bit of a slowdown on the labor market. So I'd be surprised if we have a turn and the Fed starts hiking rates, but that's how you would get to 6%.
Okay, let's hope we don't end up with that scenario analysis. Kathy Jones there of Charles Schwab. Other stories trending on your Bloomberg channel. This is how they look. Schroders plans to cut as much as 3% of the workforce as the new CEO, Richard Oldfield, looks to revive the asset manager. Bloomberg sources say the firm is cutting 200 jobs that are mostly in technology. Citi also eliminating more jobs, streamlining operations with the aim of increasing profitability. A security cabinet meeting is underway in Israel, and the latest headline says that the hostage release is expected this Sunday, pending approvals. Prime Minister Netanyahu had said the agreement with Hamas to pause the war in Gaza has been finalized, suggesting it's on track to begin Sunday. Bloomberg sources say Treasury Secretary Yellen's computer was infiltrated and unclassified files were accessed as part of a broader breach of the agency by Chinese state-sponsored hackers. The operatives accessed employee usernames and passwords and over 3,000 files on unclassified personnel devices. Coming up, the path to the Treasury. It has been cleared for Scott Bessent. More on the confirmation hearing in just a moment. Context matters on Bloomberg. Here's Bloomberg Brief. I'm Manish Cranny in New York. Treasury Secretary nominee Scott Bessent is on track to be confirmed in the position of Treasury Secretary following his hearing yesterday. Here's part of what he had to say.
The United States is not going to default on its debt if I'm confirmed. The FOMC should be independent. I will be 100% on board for taking sanctions up, especially on the Russian oil majors. Americans are barreling towards an economic crisis at year end. If we do not renew and extend, then we will be facing an economic calamity. On CBDCs, I see no reason for the U.S. to have a central bank digital currency. I firmly believe that if confirmed and with your counsel and support, we can usher in a new, more balanced era of prosperity.
Let's get to Washington now. Kate Ackley is with me, our government reporter. Kate, Bessent arrives with a very different set of baggage to Hegseth at the start of the week, and he really, really did make the priority of the Trump economic, the dollar was there, the deficits were there. This was a very different hearing, wasn't it?
Oh, absolutely. I mean, he doesn't have that kind of, I don't want to call it personal baggage exactly, but the scandal, if you will. And he talked about some of the policy priorities of the second Trump administration that also happened to align with Wall Street and the business community, and that's tax cuts, tax cuts, tax cuts. They really want to make that a big priority for this year when some of those of the 2017 tax law are set to expire. He also was really on message about growth. Growth is a priority. Growth will overcome any of the deficit and the spending problems. Tax cuts equals growth. You really saw him staying on message on those economic policy priorities.
So what do we think we're going to get in terms of executive order outside of tariffs and outside of immigration? He's going to lean heavily into Bitcoin. It's going to be the creation of a national Bitcoin stockpile.
So the people who are in Washington, lobbyists for the cryptocurrency and digital asset industry, I mean, they're almost giddy. They're really gearing up, though, for an extremely busy year, not just with executive orders and at the White House, where, there's going to be the first crypto czar coming in. We've got a crypto inaugural ball on the lineup for this weekend. But they're also really pushing in a bipartisan way in this new Congress as well for legislation that looks a bit like what passed the House. It was known as Fit 21 that passed the House last Congress. Something along those lines we're expecting to see move potentially through the House and Senate this year with incoming President Trump's support from the administration.
Now, talk to me about the rally. We're going to have a rally in Washington on Sunday. This is very different to any other sort of inauguration rollout. You've got everything there. Hulk Hogan, apparently, and the Village People.
Well, the Village People, I think, were not at the Republican convention, but Hulk Hogan, of course, was a big star in Milwaukee over the summer when Republicans had their presidential nominating convention. So it makes sense that he's back. He was, like I said, a big star in that event on when President Trump, incoming President Trump, accepted the Republican nomination. But it's going to be a big scene. It's going to be on TV and grab a lot of headlines. But I also wanted to point out there are going to be just loads of events, many of them corporate sponsored. You have big business and you have big business moguls, whether it's Mark Zuckerberg from Facebook, Meta, Amazon, other companies that have contributed to the inaugural fund. And you have private parties and big balls happening all over town. All through the weekend. It's not just on Monday on Inauguration Day. They're going to be happening Friday, Saturday, Sunday, Monday, late night parties, filled with corporate executives, lobbyists, members of Congress. It's going to be, one lobbyist told me it's going to be one big party the whole weekend.
Well, I hope that you've got the tickets and the invitations, and make sure you make it to work on Tuesday. Kate, thank you very much. Kate Ackley in Washington. Let's stay with Washington. It is pretty much a make-or-break weekend for TikTok. The U.S. Supreme Court ruling is set for 10 a.m. Eastern. The ban in the U.S. is scheduled to kick in on Sunday, but President-elect Trump has vowed to give the social media app more time. How can he do that? Tamlin Basin of Bloomberg Intelligence is with us. Tamlin, what exactly? I mean, look, there's bipartisan support for some kind of reprieve. So there's support from all sides of the House. What can they do to delay the January 19th deadline?
Yeah, sure, man. So we don't think that they can do all that much to delay this January 19th deadline from taking effect. But what we are seeing is a little bit of momentum, again, on a bipartisan basis. They really got in action last night when we saw Minority Leader Chuck Schumer say that he favors a delay. Now, what this would be a delay would be to find an American buyer for TikTok. Now, again, I don't think there's going to be enough time to get anything passed to delay that January 19th deadline. So most likely that law is going to take effect on Sunday, and then we might have a reprieve early next week through sort of a bipartisan basis at Congress.
Look, the Supreme Court's expected to rule today. What is the best case scenario? Is there a caveat they can deliver? Is there a verbiage that they can deliver?
Yeah, so the best case scenario for TikTok would be winning on the merits, would be a Supreme Court saying this was an unconstitutional law. Now, if we paid attention to last Friday's arguments, and it definitely did not seem like 5 justices were siding with TikTok. So potentially what they could do is say, we're not necessarily going to rule on the merits right now, but we are going to delay the ban because we do have some questions on this. So I think that would give TikTok a little bit of time. Again, we're going to have to wait and see this morning when the court releases its opinion if there's enough there to save TikTok in the near term.
But then, of course, Trump has floated the idea of an executive order to save TikTok. You think that'll just be a simple announcement, or will it have complexion as well?
I think there would be a bit of complexion, again, because an executive order isn't necessarily going to override the law. So what it can do is say that maybe we're not going to enforce this law while we work towards other options. The question for the companies that are hosting TikTok is whether they're going to rely on that. They're a massive liability if you violate this law. It's hundreds of billions of dollars. So the question is going to be, are these technology platforms, are they going to stop hosting TikTok? Or are they going to pull it off the app stores based on this executive order? And I think that's a pretty difficult call for management teams.
Tamlin, thank you very much. Tamlin Basin there of Bloomberg Intelligence on TikTok. Let's see what happens. We'll be back on Tuesday and we'll let you know the outcome. Let's turn our attention back to the confirmation hearings, because when asked about Russian oil sanctions, Scott Bessent answered that he would support dialing them up to end the war in Ukraine. Let's get to Will Kennedy. He is our senior executive editor for Energy and Commodities, joining me now. Will, Bessent, verbatim, I will be 100% on board with taking sanctions up. Now, this was a little bit of not so much of a shock. He didn't name the names in Russia, but this just shows you we're going to a new level, a potential new level of stick rather than carrot to try and draw close to the Ukraine-Russia conflict.
That's right, Manus, and I think what we should take away here is that oil sanctions are definitely seen by the Trump team as part of the toolbox as they work towards their aim of ending the conflict in Ukraine. We also ran a story yesterday trying to talk people through the thinking inside the Trump camp. And yes, ratcheting up sanctions to put pressure on Russia is definitely one option, as Bessent said yesterday, but they're also thinking that if it helps get a deal, they could show some goodwill and by going a little bit softer on oil sanctions. So I think what people should take away is, as we get into the new administration, as we look perhaps towards an end to the war in Ukraine, oil sanctions on Russia are going to be a part of that conversation and a part of that process.
Describe the state of the Russian oil industry at the moment, because we saw the Biden administration go after the tanker fleet, the shadow tanker fleet, the insurance side of the business. If the Trump administration escalates, it will probably involve the name Rosneft, which they did not name by name yesterday. So what shape is that industry in?
Well, broadly, the Russian oil industry has come through the last 2 and a bit years pretty well. It is managing to hold production pretty close to highs. It's exporting a lot of oil. It's having to use a shadow fleet to do it and change the way it trades and exports oil. But that oil is finding a market in India and China. Before we get to the Rosneft question, though, I think the point is that the sanctions that the Biden administration introduced earlier this week, they are very material. And I think a lot of people, when they look at those sanctions and doubling the number of tankers that will be placed under sanctions, think that it will materially, at least in the shorter term, really impact their ability to export oil. So I think these current sanctions are a step change. And clearly, if they did do what Besant said yesterday and sanction oil majors, i.e. Rosneft, as you say, then it would ramp it up further still. And then you are getting into a situation where sanctions probably are cutting exports from Russia.
Very briefly, this was supposed to be the year of surplus. If this next administration goes more max sanctions on Iran, Venezuela, and Russia, that changes the narrative and the discussion, Will, doesn't it?
Quite possibly. I think there are two variables, though, before we can answer that question for certain. One, of course, as always, is the Chinese economy. Clearly, Chinese oil demand disappointed some people last year because of the general weakness in the wider economy and maybe some structural shifts to do with EVs. Does that continue or does it pick up? That's one question. And then if we have these sanctions on those three countries that you outlined, does OPEC respond? Do they put more barrels into the market? We don't know the answer to that.
Will, thank you very much for being with me this morning, Will Kennedy, on the Scott Bessent hearing. Coming up, President Trump gears up to return to the White House. We'll give you the context. Bloomberg Brief. I'm Manish Krenny in New York. I look at the rest of the weekend for you, and it's a pretty packed one. In terms of data, U.S. housing starts and building permits, 8:30 a.m. Eastern today. And then it is the confirmation hearing for the Secretary of Homeland Security nominee, Kristi Noem. That's at 9 a.m. Sunday, the incoming president holds a rally in Washington, plus the TikTok ban will kick in if the Supreme Court doesn't take action. Now, there are some individual stock that you got to keep an eye on. You got Lamb Research raised to overweight there, and you got that's at KeyBank, and $95 is the target for them. Applied Materials also raised to overweight at KeyBank, price target $225. The analysts there are saying the industry target of $1 trillion in semi sales by 2030 is on track. JB Hunt, the shares slide after the quarterly profit trails estimates. Now, we've just finished a conversation about oil, but this is really where you want to focus your risk. We're into the fourth week of gains. Scott Bessent is prepared. I will be 100% on board with taking sanctions up. What does that mean? Could it be to Rosneft? Keep an eye on copper. You're up the longest winning streak since 2017, 8 days in a row on the back of that China GDP coming in at 5% for 2025. But I want to go to the bond market because this is what really matters. This week has seen a considerable repricing, down 16 basis points. I've had two conversations. State Street say 5.25% is eminently possible. And we've just had Kathy Jones from Charles Schwab. She's basically saying, yeah, 5.25, but it's going to be darned hard to get to 6.